Hello traders, hello everyone. It's Monday, May 22nd. Welcome to our new webinar. Is everything fine? Let me just check if this works. Hi, okay. So it looks like that chat function is working fine. Okay, so how are you guys? We have some slow price action today, but I'm sure we will get an interesting volatility still during the week. We have plenty of important data that will drive this market, and as you know, the most important will probably negotiation on US debt ceiling. So I think that this still can be some opportunities within the dollar strength, but we will see how long this and how far this dollar move can stretch. So US debt ceiling definitely will have to keep an eye close eye on this. Then we have also European PMI data tomorrow. Then we have Bank of New Zealand trade decision, FOMC meeting minutes on Wednesday, and then also UK inflation data. Okay, so this will definitely be very, very important after, as you know, inflation UK was above 10%, and now I think that they are looking for 8.2, yes, from the previous reading 10.1. So this should be very, very interesting mover here on cable after we get the data. So I see everyone is doing well. Perfect. I see that we have more visitors here on YouTube rather than on TradingView, which is fine, but I will keep an eye on both chat boxes. So if you have any questions, let me know. I'm fine. Thanks. How about you? Well, I'm fine. Thank you. But always love to be back after 2 days off because I just love tracking markets. So, okay, we will start with US dollar index. So for now, it's still a very strong move over the last few weeks, and looks like that this is part of this consolidation that I am tracking since start of February of this year. So I think that we are just in a corrective sideways price action within high degree downtrend. I still believe that there was very important top formation here in 2022. But of course, after this very strong drop here, it just makes sense that market will now slow down, is now slowing down for three waves substructure. So ideally, we are in a flat. We know that in flats, wave C should be made by 5 subwaves, right? So even if we see very strong move to the upside, let's say back towards 105, I still think that this will be just a temporary recovery, and that later this year we will see more dollar weakness. It's really interesting that now we also have stocks coming to the upside at the same time with the US dollar. So maybe stocks will see a really strong move higher once US dollar index or dollar in general will potentially find the resistance. But for now, that's still not the case. And if you look here, you can see that actually these recent supports were found at this trend line. Okay, so definitely it makes sense to see some kind of a slow sideways price action, but still looking at the longer term charts, I assume that we could resume lower towards this trend line support. Okay, so for now, just sideways, but higher degree trend, in my opinion, is still to the downside. Of course, this will be important to look at the US yields. Let me check where I have the US yields. So obviously, higher US yields. Where I have is here. Okay. So higher US yields equals to higher dollar index. Of course, nothing is always 100% perfect. Nothing moves tick by tick. But in generally speaking, we have seen here a top on yields, I believe. These are the 10-year, by the way, here, and that we are now in a higher degree ABC correction that still can be headed even below 3%. And at the same time, obviously, then I'm expecting more dollar weakness. And you can see that I'm now tracking and observing these final stages of this corrective rise, which can equal actually to wave C that I'm tracking here as well. But for now, we don't have these 5 subwaves yet here within wave C. Okay, or if you look at the 10-year US notes, we don't have these 5 waves down yet to complete this current pullback. So I think that as long as this market is trading to the downside, potentially unfolding these 5 waves decline, that's how long the US dollar can stay in uptrend. But once we'll have this strong price action that this lag is finished, that's when dollar could also potentially be looking for resistance. Okay, so for now, dollar strength, in my opinion, is still in the cards. We are seeing a very weak euro, and also commodity currencies. I mean, Aussie in particular is very weak. Pound also is not looking good, in my opinion. So all of this can see more weakness after once the US dollar index is going to see another push higher. If we look here on the intraday chart of dollar index, you can actually see that I'm tracking this 5 waves recovery from that low here that goes back to start of May. So we are now in a corrective pullback, and we know that support can be seen anywhere between 23.6 to 38.2%. I'm looking at the 23.6 whenever we have very extended wave 3, like here in our in that example. Then maybe pullbacks will not be that deep for the 38.2. Also, keep in mind that this was quite an extended sub wave 5 here, right? So normally when that's the case, you can see that higher degree wave 4, black wave 4, can retrace to the starting point of the previous fourth wave, which was here around 102.70, rather than retracing all the way back to this 102.20 area, which was the ending point, okay, of a fourth wave. So normally when you have this fifth wave extended, higher degree correction of the next fourth wave can already find the support at this level here. So 102.70, in my opinion, is a very important level, and this obviously comes in somewhere below these 2 fips that I mentioned. Okay, so I think that when this correction is finished, more dollar strength could be seen, even if just temporary, towards 104 retest, and that's when other currencies could experience more weakness. So looking at cable, I think that we are trying to form a top here, and if we go just look here again on this chart, we obviously shared it last time as well, but still nothing has really changed. But I just want to make a quick recap here. So that's a resistance. We also traveled with a fifth wave for 61.8% of wave 3. So it was a very important level, not because I marked it as a resistance, but because market actually responded and reversed down from it. Okay, also if you look here on the 4-hour time frame, we came down from an ending diagonal. As you know, we've been tracking this one for a while, and this reversal now appears like it can send prices even lower after some stabilization here. So maybe we're now in a corrective pose here. So 125.45 is still very important resistance if we suddenly jump towards this level, but maybe now this pair will really try to confuse traders a little bit until we get this inflation data then this week. That's how long this maybe pound will really have no defined direction. Okay, so but overall I think that there is a bearish price action going on, and we'll continue to look and observe for deeper prices while we are trading below this 127 level. Okay, so I will be looking for more weakness. Also, I like how the substructure, let me zoom this in. I like how the substructure here unfolded in 3 waves. So always when you see this 3 wave movement into a new low, you can assume that maybe these 3 subwaves are part of the higher degree irregular correction. Okay, I have this one here. Okay, you can see that's an ABC drop for wave B, and now we could be headed higher, maybe just short term for wave C. So could be expanding flat, even could be running but still anywhere resistance is anywhere between 125 to 125.50. Okay, so I think that there is a chance for more weakness here, as I said, if dollar index will potentially stabilize. But of course, UK inflation data, that's probably the most important. As I said earlier, 10.1 was the previous reading, 8.2% is now expected. So that's a quite big difference, I must say. So it will be really interesting to see if maybe cable can see more weakness if forecast will be correct, or maybe even inflation lower than expected. Now, let's take a look also, as always, on Aussie. So Aussie still very weak, much weaker than Kiwi, for example. And as you know, it has something, it has a lot to do with China. Obviously, China is still trying to stimulate their economy because they are not, economy is not picking up just yet as they want to. But there are some trade talks with other countries. So maybe this will still have a positive impact on Chinese yuan and Aussie in general, but I believe that we are not there yet. Now, looking at the wave structure here, I still think that this is some. Now, again, even if you try to ignore the wave principle, I'm sure that you will see this as a potential bear flag, right? So you have previously seen a very strong reversal, now just consolidating. So what would you expect? Another push to the downside. So I think that there can be a room for 65, 60, 61.8, 78.6%. These are my key levels for a bounce higher still this year, but maybe after summer, who knows. For now, that's still ongoing weakness with wave C, which is here. So I'm looking for more weakness. Wave 2 could be underway, could be already approaching some resistance. So region at 66.70 up to 67 is still very important potential resistance for this downtrend to resume. Now, Kiwi is much stronger, but also shows somehow similar price action. But maybe Kiwi will be a little bit more tricky to trade, especially if Bank of New Zealand will be much more hawkish. Okay, keep in mind that in the previous meeting they surprised and hiked more than expected. But interestingly enough, market still, I mean currency in general, still after initial spike higher, still turned to the downside later on. So we'll see if Kiwi and Aussie can remain weak. I mean, metals are also looking weak, and as you know, gold is somehow trying to occasionally trying to hold correlation with Aussie, and with current move down on metals, Aussie of course is having some hard time trying to attract buyers. Since I mentioned dollar Chinese yuan, this is just a second where it is. Okay, here it is. You can see here that on dollar Chinese yuan, I'm tracking ongoing free wave recovery. So I think that we are still in the middle of this wave C. Wave C should be structured by 5 waves, right? 5 subwaves. And for now, that's not the case yet. In fact, over the last 2 weeks, we have seen a very strong move to the upside. That's the reason why Aussie is obviously also very weak. And I'm afraid that there is room for more upside until we complete this recovery, and that's how long, of course, Aussie can stay weak. So here's Aussie at the bottom. It's on a line chart, and you can see that I will be expecting whenever this corrective rise on dollar Chinese yuan will come to an end, I will be looking for a failure break here to new lows of 2023 on Aussie, and then maybe a reversal higher later this year. And obviously this makes sense if there are maybe will be successful in China with their stimulus plans and to support their economy, then of course Aussie could benefit from that. Now, since I mentioned Aussie, Kiwi, let me look into it. Thank you, Oleg, again for your support and kind words. So Kiwi again is still looking bearish. I mean, it looks very nice price action actually. Okay, we have ABC formation, strong drop, and now another on a smaller time frame, another ABC movement. So that's a perfect resistance right there, right now happening. Validation level obviously is around 63.87. So if anyone wants to be on the short side, of course that's the level you should pay attention on. If we cross 63.84, maybe after New Zealand will potentially raise rates more than expected, who knows, that's when or where you will know that we are wrong. Okay, but for now I still think that that's ongoing weakness. Very nice price action so far, and I will stick with the potential bearish view, especially now when the US dollar index in general is picking up. But sometimes, of course, it's always good. Sometimes it's always sometimes it's good to look at crosses as well, like Aussie versus Kiwi, and you can see here that this one is trying to break out of a triangle. Okay. Okay, so this one is coming to the downside, meaning that New Zealand is much stronger than Aussie. So of course, both can continue lower versus the US dollar. But maybe if you're looking or not sure which one you should pick, maybe you should look at crosses. To me, this looks like it has potentially more weakness. But as I said, maybe rate decision in New Zealand will make these things a little bit more complicated. But that's what the charts are telling me for now. We have previously seen a very strong 5-wave drop, and now we are just consolidating. Breaking this trend line obviously makes me bearish for much lower prices into the wave C. Okay. Now let's take a look also on dollar yen. Before we go to the dollar yen wave structure, I want to pay attention obviously to bring on this Nikkei. It's at the bottom, and if you were following us or some of our free updates, then you know that we also been tracking Nikkei a few weeks back, and we said that this breakout here around 28,500 obviously could potentially make dollar yen even higher. You can clearly see that correlation was somehow lost through 2022, but then here at the bottom in January on both markets turned higher, then even higher swing low here in March made the same. And now we can see that price action is actually accelerating here on Nikkei. So I'm afraid that there is room for more upside, and this could potentially bring maybe dollar yen towards 140, 142 even, but still as a correction. So what would be ideal scenario? Well, again, if you're familiar with the wave principle, you know that moves out of a triangle. Okay, if that was a triangle, move out of a triangles are final within the higher degree trends. So what this means is that this is now the final leg, final piece of the higher degree bullish impulse. So we know that after this massive breakout, sooner or later, there will be a massive reversal going on. Okay, and when this will be the case, ideally that's when also dollar yen will move to the downside. Okay, but of course we'll have to be very patient here. We have to watch US yields and dollar index in general. But for now, with higher US yields, with higher stocks at the same time, with higher dollar at the same time, obviously dollar yen is moving to the upside, because normally Japanese yen will fall when the stocks are moving to the upside, or in other words will rise if stocks are in a risk off mode. Okay, so I think that there can be a little bit more upside here on dollar yen, but still just in the short term. Keep in mind that the longer term, I still think that we are obviously here moving into the resistance, but as I said, 140, 142, maybe this upper channel resistance line can be retested, and the 61.8%, who knows. But for now, obviously, one of the reasons why Japanese yen is also trading to the downside is because Bank of Japan is fine with the current policy, especially yield curve control. Okay, and if anytime this year, there are plenty of speculations that this will happen this year, they will remove maybe this yield curve control, then this will also be visible through the price charts as well. You will see probably massive move higher on Japanese yen. Okay. Inflation and yields are going to be a lot higher in coming years. Yes. Of course, inflation can be, but I'm not sure how high they can go with the US yield, since we know that this will probably bring in the recession. We already have this credit tightening conditions from banks, so further rising of the interest rates would probably do a lot more damage than probably that they don't plan, I would say. Okay, so dollar, but thanks for the comment, DB. Okay, so dollar yen still headed higher, moving into the potential resistance, as I said. Looking at the looking here at dollar yen hourly chart, some very nice price action here. You had a pre-waves drop, 38.2% was retested. We are headed higher now. I think that 139, 140, as I said, could be seen. So these moves could be seen at the start of the week, but then later this week, maybe this recovery could potentially come into the first resistance. So 140, definitely a very big and important level, in my opinion. Now, let's take a look on crude oil. Okay, so crude oil is still very strong, very important level here, around 57 to $63 per barrel. So this whole area is very, very important. We have seen very nice reversal higher, and I still think that we can see more upside since market recovered very nicely in impulsive fashion after this spike down. So watch out, maybe still a little bit more complex wave 2 is possible here, if not completed there at 69.40. So rather than invalidation level, I would label this as important support if we see a retest of this level. Okay, so we either go higher from here or from this new swing low. I still think that there is a very nice pattern building up here that will potentially send these prices to the upside. So we'll see how this will impact some of the commodity currencies. But since I mentioned earlier, I mean, even dollar Mexican peso is turning sharply to the upside, reversing quite sharply, and Mexican peso, by the way, was one of the strongest for the last few months. So in my opinion, if this one is also turning around, then this dollar strength may really not end just yet. Okay, but we'll see how this whole thing will impact Mexican peso. Obviously, if higher crude oil would equal to strong dollar Mexican peso, but again, that's not always being the case, of course. Now, crude oil, as I said, then more upside, at least in the near term. Maybe this swing high here could be retested from, that goes back to the end of April, $77 per barrel. That's still a June contract, by the way. Now, of course, the new contract will be this week. Now let's take a look also on the S&P 500. Okay, so just a second. Okay, so the S&P 500, finally we are here above this key level here, 4,200. But notice that we are not seeing any kind of a real very strong breakout. I'm just afraid that we'll just keep chopping around if the dollar will keep moving higher. But still, I mean, I will be expecting more upside either straight from here into the wave C, okay, or maybe there was a flat formation for wave 2, and we are going to see more upside after this next pullback that will be part of this extended wave 3. Okay, let me label the subwaves then, something like that. Okay, so in either case, I think that there can be more upside coming. I also realized that this could be some kind of a triangle that's been broken, so again there can be some resistance not far away, but buying pullbacks here on those stocks, I mean, technology sector is also very, very strong. We are seeing some impressive moves on like AMD and nvidia as well. So I think that stocks, especially some single stocks, could do very well. So even if we see some pullbacks here on S&P 500 over the next few weeks, I think that there can be buying opportunity. Now, also looking here at, let me check my notes just a little bit. you can also see here on Dow Jones futures, we have very nice impulsive reaction higher. Now counter trend movement maybe still can be playing out. So again, the support remains here at the 1561.8% at this trend line if it's going to be retested. But in either case, I am going to look for more upside while we are trading above that area. But in the short term, there can be some resistance, especially if this will also be the case on the S&P 500. As said, we are still not seeing any real strong acceleration higher after this push above 4,200. So maybe some short-term setbacks could be seen, looking at this chart. And also German DAX okay, so German DAX also came out of the triangle here of this fourth wave that was finished with the triangle in final stages of this complex correction. So again, could be limited upside since I can count 5 waves up from that much lows. Keep in mind that we are at the all-time highs here, so making some pullbacks here again would make sense. Would not be surprised if we see an ABC retracement. So of course, if this one suggests also that we see resistance in the near term, I should not ignore maybe something similar on the S&P 500. Also, if we take a look on gold, so on gold, we failed here at those highs. We are now pulling back. So I adjusted the wave count and came out with an idea that actually market completed these 5 waves up here and that we could be now in ABC formation. So still I'm tracking a counter trend movement. So in ABC, you need 5 waves down for subwave C. Looking at the 4-hour chart here, not the case yet. So maybe some more weakness here could be seen in the short term. The supports that we see is 1930 to 1900, but keep in mind that even if this would be 5 waves drop of a new bearish cycle, you would still expect maybe some kind of a support down here, okay, for at least short-term recovery. So gold is a little bit tricky, I must admit, but still I really doubt that we will see a major top here. Either we will just chopping around or we'll still see a turn to the upside in the next 2 weeks. But you just have to be a little bit more patient now, because even if this is still a counter trend movement, it's still incomplete, okay, in my opinion. But if we cross, let's say, from here and we break with the daily close price, again the most important price of the day, above 2000, then you will have this overlap with wave 2, okay? And in such case, this overlap could potentially signal that maybe we are headed back to the bullish side. Okay, so this would be quite nice for bulls if we can cross 2000. But as long as we are below that level, of course, this could still be a bearish potential scenario. Now, let's take a look also on the euro-AUD and euro-kiwi. Now these pairs are very interesting. They are making a sharp reversals. Keep in mind that those crosses will normally move to the downside in risk on mode, and if really stocks are going to resume higher in the next, let's say, those technology sector in the US in particular, in the next few months, then maybe euro-AUD, euro-kiwi could really potentially see resistance forming. So far, we have a very nice reversal here after 5 subwaves up for wave C. So we are coming to the downside, not really in 5 waves yet, but I think that if we can print a new low this week, that this will send the prices even lower, since we would have enough information that the top has formed. Looking at kiwi here, this one already has potential 5 waves down here, okay, because we printed a new low last week. So I think that these pairs are looking quite interesting, and that maybe these signals that we are really going to be in the risk on mode here over the next few months, because obviously risk on mode will have stronger correlation with AUD and kiwi. Okay, let's take a look also on Bitcoin. Where it is? So cryptocurrencies are very slow. Maybe they're trapped between higher stocks because as you know, cryptocurrencies will normally try to follow technology sector, but for now that's not the case. And then you have also very strong US dollar. So maybe that's one of the reasons why this thing is not moving much. So still, we are tracking two wave counts. Now the first and the primary is that this is still an ABC formation from the highs with a triangle in the middle, and that we could be bottoming already, but for now it's a little bit too soon to say that that's a final low, simply because we also have because of its slow price action, there's also a chance that maybe this could be even some kind of a wedge formation here with a print of new low and then turn to the upside, especially if maybe dollar index would really jump higher. So it's very important to be a little bit more flexible here and nimble, or maybe if you think that cryptocurrencies are trading at a support, which we think they are, you should be very selective on some of the altcoins, but generally speaking, I think that the structures are looking quite promising. Looking here at the Ethereum, also you have these three waves to the downside and could potentially see more upside, especially when if the upper trend line is broken. Okay. Also, if we take a look, I have some single stocks here, I believe. Just give me a second. I want to look at the Tesla and nvidia. I think that they are quite interesting. Okay, so here we have this nvidia making a very strong move to the upside, as you can see. So obviously, we would expect that at some point maybe cryptos will try to catch those gains. And it looks like obviously that there will be more gains coming, because this is clearly ongoing impulsive price action, very strong move, very nice extended waves here. But of course, after the supports that could be retested at 260, 290, that's the area from where I would be expecting more gains if we obviously will come back into this range. You had the previous fourth wave, some consolidations were going on here, so that's definitely the area that I would pay attention on. Also, looking at Tesla, we posted this one as well. In even here on TradingView, I think that we made this free analysis weeks back, and so far looks very promising. I mean, we have a very strong move to the upside from new lows, clearly in 5 waves, and that's a counter trend movement made by 3 waves. It came back to this support from earnings from start of the year. Now we are trying to move back to the upside. So far this looks very, very constructive, and I think that sooner or later we will be revisiting these 217 levels. Keep in mind that whenever you see corrective movement and this one is completed, this whole corrective movement should be fully retraced, okay, by the next impulse. So in my opinion, there is room for more upside, but of course there can be much more complex wave C. But just generally speaking, I think that this price action here on Tesla looks very, very promising. Okay, traders, that's it for today. I hope that you enjoyed this presentation, this video. If you like our content, please make sure to click a like button below this video, leave us a comment, subscribe to our channel, and make sure to be notified next time when we will schedule a new webinar. Okay, so again, folks, have a good day, trade well, be careful, trade small.